How's it going? Today we'll be discussing about order blocks. Yeah, we'll be discussing about order blocks and how you can spot an order block, a valid order block, what like what is the use of order block, what is it used for in the market, and why you as a trader need to be like after it, like why you need to like respect other block. I'll just put it that way because it sometimes moves the market, and that is where big institutions like banks, federal governments, traders who trade with big amounts of money. Let me just say the banks and the federal governments, the feds, because they are the ones who use big market. So that is an area whereby they place big amount of orders with your big money. So they do so that they can get into a good position in the market. So wherever you as a trader you don't know what other block is and you are trading, you might get taken out because you might end up losing your money. You get it. So let's now go to the chart. Let me now show you examples of other blocks and why you as a trader needs to be like concerned about other blocks and everything related to it. So I'm going to be showing you live examples on the chart right now so you can understand the movement, like why and how it moves the markets. So I want you to watch this movement right here. Watch this movement. You can see that it leaves a candle. I want to like zoom it out for you so everyone can see it. So this is a bearish downtrend. This is a bearish downtrend. You get it? It has this candle in here. So you're supposed to be wondering, you need to be wondering, why is this green candle here? What is it doing there? What is the job? What is its job? What is it doing there? So you see how the market broke down, you get, then it went up to that green candle and dropped. That right here is an order block, and when you watch it from this angle you will see that it hasn't been mitigated. A mitigated order block is whereby a price have to trace back to it. That is what it means by a mitigated order block. Get it? So you see that immediately price drop, it went to that other block here. This point of interest, I call them my point of interest. You see price coming to that area, mitigating it and continuing the movement down. A valid order block has fair value gap. It has fair value gap. Let me show you what a fair value gap literally is. I will be discussing about this in my next videos, but let me just show you what it is. So you can see that the other block is so valid that it has a fair value gap. You see price coming into the fair value gap, feeling the imbalance right here. It feel the imbalance. It went up, properly mitigating this other block, then dropping down. So as a trader you need to be always watchful, and you will always find this other block when there is a break of structure, not a change of character, break of structure. You will find fair value gaps at like places like maybe change of character with also break of structure, but other block will always be for break of structure. Yes, you might see it in the second maybe in the change of character, but other block most especially is found in break of structure. You can see that this market broke structure. It broke structure. It was trading like it was consolidating before. This is a falling wedge. It was consolidating before. Then you see market drop down, went back up. Traders who lack the ability to know what this area is will think the market is about to start flying. Some persons might even enter a buy from here. You get it? You see how the market dropped down. You see how the market reacted. So let me now show you. Let's show you that's a bearish order block. Let me show you more examples so you can see the kind of thing the order block literally does in the market. I want to show you more examples. Okay, I want to show you a big order block so you can know how diverse this other blocks really works like. I want to show you how diverse it works like, because if you don't know what's like how it works, it's very bad, because you might lack the ability to know when it happens in the market, and you'll be like, what make this market to move, or maybe or do this particular thing or go to this direction by particular direction. So you see the other block right here. So you see that, you notice that whenever price came to that area, this is the other block right here. You see that when market was trading, come to this area, you see the market went back down. Maybe this area might be a support zone, but that area has an order block, and you mark an order block by the wicks. You get, the wicks are very 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 important in most cases. Like whenever the order block is about to be mitigated, it does not it's not a must it must touch the wick. It might even touch, it's not a must it must touch the body of the candle of the other block. It might even touch the wick and start going to the intended direction. You get, I want to look for another block that is more understandable so you can understand what I'm talking about. Okay, I guess I've seen another one. Okay, this one is better. This one is better. This is an order block. What does it mean? Order block is like where price got filled, because if you notice, this price was going down, this market was like intended to go down, but I don't know, the people who push the market, they choose to push the market upwards. Look at this market very well. They choose to move it a bit up. Why they are doing so is to sell at a premium price. They choose to push the market up, then they will sell. Those who lack the ability to know what's going on will think the market is about to start going up. No, then you see the market start going down. It lifts this first order block, lifts another second block. This one is more value because it has a fair value gap. Look at the fair value gap. You see how market traded, came to this fair value gap, filled the imbalance and dropped down. You just take profits. You get it. Then look at it again. Look at it again. I'm going to show you how the market is reacting. Then you see how it was trading. It was trading, and when price came to it at this point, you see how price came into this yellow area. You see how market dropped down, came to it again, touched it again, and dropped down. Like the other block was so strong, and it came to it multiple times. So why do you think the market is going to that area? That is where the banks are pushing the price to. They know that is an area where price got filled. That is a premium price where price got filled. You see how price came to it multiple times and dropped down drastically. It dropped down drastically. So these other blocks, there is not a must that they will be so big. Yeah, though the bigger ones are the more valid ones because they always maybe leave fair value gap. But sometimes they might be very tiny. If you are a trader that scrap, you will know what I'm talking about. Sometimes these other blocks might be tiny, they might be small. You will always find these other blocks at 15 minutes time frame and 5 minutes time frame, and even in 1 hour time frame, 4 hours time frame, weekly time frame, daily time frame. I'm just talking maybe the kind of trader you are. You don't have time to be waiting for weekly other block or a 1 hour other block. You just go to the 15 minutes, 5 minutes. You will see them whenever price is coming to that place. Just be watchful. I did not say you should enter the market immediately, but just wait to see how the market reacts. One fine way of like understanding how the market moves is by waiting. Watch the market, watch how it reacts. Mark out these things I'm teaching you guys. Then you see how market reacts. So I'll advise you to go to your own chart and watch out for these stuffs. Have it in mind that a valid order block always have a fair value gap. Whenever price comes to that area, it has been mitigated. But if price have not come to that area, it has not been mitigated. That order block is still valid. So thanks for watching. Please subscribe to my YouTube channel.